Welcome to another episode. My name's Jose Najarro, and today we're going to take a look at Luckin Coffee. So let's get started. Before we begin, I'm going to give around the overall picture of what's going to happen in this episode. First, Luckin Coffee, the stock is down about 10%. I think it even hit almost 15%. It hit almost 20% down this past Friday. We're going to talk about why that happened, and I'm also going to give an overview about the overall company. I'm going to take a look at their most recent earnings. So that's pretty much how this episode is going to go. So first, just Luckin Coffee, just a quick overview. It's a coffee shop company in China. It is one of the biggest competitors for Starbucks right now in China. So yeah, the company is down, was down about 20%. It ended the day at 10% down. And the main reason was that there was this short seller firm that ended up releasing an article. So let's get started and see what that article was about. All right, so the first thing is stock plunged almost over 19% on Friday after Luckin short seller Muddy Waters Research, who is a big-time firm, and tweeted a link to an anonymous report alleging that Luckin is a fraud, and they are reporting different things. The author reports claims to have documented about 11,000 hours of store traffic surveillance videos that suggest Luckin's numbers that they provided in their last earnings were inflated, and the numbers of items sold were also inflated by about 69% in the third quarter, about 89% in the fourth quarter of 2019. They also alleged that Luckin inflated its net selling price per item by 12.3% based on cross-checks with almost 26,000 customer receipts. Right, so this company, right, is a short seller firm that has Luckin as a short seller stock. And they just released some article that says that, hey, this company has been a fraud. They're giving fake numbers on everything. Another thing that this company also says is that the coffee model in China is flawed. And I understand if they have data on the other things above, but I feel like this part in the bottom right now is more opinion based, which is them just trying to continue to beat on this dead horse at the moment. And some stats that we're giving here is Chinese citizens intake about 86 milligrams of coffee per day. 95% of that 86 milligrams come from tea. So they're saying that even though the coffee market is such a slow growing market here in China, so this is a slow growing company opposed to a large growing company, which everyone's making it out to be. They do give some, in this article, they talk about Muddy Waters, and Muddy Waters has a mixed track records of making similar claims against other Chinese companies. It has been successful in some companies, but then it has not been successful in other companies. One of the companies they talk about is Tao Education Group, which back in June 2018, they said similar items that, hey, this company is a fraud. But since 2019, 2008, back in June 2018, so about almost 2 years ago, the stock is up 19.2% overall. One of the things to note is this is an anonymous letter, right? Anonymous report. They do, even though it is an anonymous report, Muddy Waters is saying, hey, we trust whoever sent this outlet out, this information out, but they're not willing to give a name. There was another research group that responded to Muddy Waters. So this one is along of Luckin Coffee, right? So they say that, hey, we respect Muddy Waters, right? We have the respect for them, but they say this article, this anonymous report will fall short, and it's not what it's making it out to seem. So it's pretty crazy, right? You see someone with the short seller saying, hey, we have this article that shows how this company is frauding. And then we have this company that's long in the company say, hey, we respect you guys, but this report is anonymous and is full of nonsense. So you guys are going to fall short of it. At the moment, Luckin Coffee has not responded to any of the claims, and we'll see. So now that we know what's going on with another few things that we could talk about that's going on with the company that's also dragging us down is the whole virus going on in China. A lot of, right, so this is definitely going to slow things down with certain cities being quarantined and public transportation and people just staying inside. It's obviously going to reduce the amount of traffic this upcoming quarter for Luckin Coffee and any other stores or any other Chinese retail companies that require footstep movement in their stores for them to sell products. So we can see that this is definitely another reason affecting this downturn of the company. So to me, it's just pretty crazy that both of these things happen at the same time, right? We have the coronavirus, and then while the coronavirus is happening, this short seller comes out with this thing. It almost seems like too perfect timing, but hey, coincidences do happen. Speaking of the coronavirus, Luckin Coffee, sometime earlier this week or at the end of this week, they reported that they're gonna donate about 10 million yuan. And yuan is about 10 million yuan is about, it's almost a 1 to 10 ratio, so that'll be like, it's about $1.5 million in United States dollars. So that's a nice amount for a startup company, a pretty healthy amount. And they're going to be donating this to provide medical supplies, masks, protective clothing, disinfecting goggles, and other medical equipment. And one thing you're going to see is in the upcoming information, Luckin Coffee is very into getting the younger generation to come to their store by all the technology that they have. So they definitely want, and I think the younger generation are a little more impactful by social image, and by doing stuff like this, I do think it will continue to help to grow. So even though they are donating for a good cause, I do think in the long run it's going to help them out with their social image. So those are the two main things, right? The first thing we talked about was the reason we saw this downcrease in about 20% in the company, and the next thing was we talked about some the social program with the coronavirus and how they're helping out, and how this might also impact the upcoming quarters with the slowness of footstep going on. Next, we're going to take a look at their most recent quarters. Their most recent earnings was in November 13th, about 2 months ago. Their most upcoming quarter will probably be coming in sometime, I would say it should have been February, mid-February, but with this whole coronavirus, I'm pretty sure it might get pushed out a little bit later. So we might see it in late February or early March, and I'll do another video on there when we get more information. But today we're going to look at their third quarter, which was November 13, 2019. Again, not that far of time, and it's going to help us understand what to look for in future earnings. So all the information I collected here comes from their investors website. So we're going to take a look at the slideshow that they provided, and we're going to take a look at the spreadsheet that they gave about their financial and some other highlights. Here I highlighted some of the important information, so we're not going to go through the whole slideshow. We're just going to talk about what I found important from here. So remember, this is for quarter 3 of 2019, and this happened in November 13, 2019. So I would expect quarter 4 to be somewhere between between late February or early March due to the whole coronavirus, and depending on how much further it goes. So here, the first thing we're going to take a look at is actually the numbers that Muddy Waters say are inflated. So the first thing is total net revenue. Total net revenue has seen an increase of 557% year to year. And yes, that number seems high, but when we take a look under that, there has been 717 new stores opened since the past quarter. So when you build up some new quarters, when you have that many stores in just one quarter, imagine how many stores have been opening up in the past year. So yes, I think it's understandable for one to see about 500% increase when you increase the amount of stores you've had in the past year dramatically. They do say we're gonna see they finally hit profit margins instead of loss margins. They're making about 12.5% on profit margins on their total net revenue. They are seeing an increase on transactioning by customers, 77.9 million new customers compared to the same time compared to last quarter, and about 470% monthly items sold increase compared to the same time last year. So this company is having high numerical increase in the year-to-year basis. So here, right, total net revenues from products up 557% year to year. Average monthly total items sold up 470% year to year. Average monthly transaction customers up 400% year to year. Number of stores up 200% year to year. So they they increased their stores by over 2 times. So like I said, if you increase your number of stores by 2 times and you becoming a bigger brand, you're gonna expect more foot traffic per store because your brand is increasing. But you're also obviously gonna expect more revenue because you have new stores. So the number of store increase to me definitely is nothing here is screaming to me, hey, this is false, right? If that many new stores have opened up, we're obviously expected to see that much more revenue. So now let's continue with Luckin Coffee. So Luckin Coffee is actually divided into two different types of products. First, they have the Luckin Coffee, and then they have Luckin Tea. And like we saw in the previous article, 95% of the actual caffeine taken by Chinese citizens seem to come from tea opposed to coffee. So I think it's pretty smart that they are also, and this is actually new. Luckin Coffee is brand new, like we're gonna see. But I think it's pretty smart that they're also outsourcing into some other form of beverage instead of just coffee, especially one that's so heavy in the Chinese market. But obviously, if it's so heavy in the Chinese market, it probably means that there's already a lot of big players in there. So, and we're going to see coffee is actually not that big of a player. We're going to compare the amount of stores of Luckin Coffee to Starbucks. And we're going to see that that's the reason Luckin Coffee started off first instead of Luckin Tea, because Luckin Tea is such a saturated market compared to the coffee market. So Luckin Tea has seen strong growth since launch. They tested it out on April 2019 in 2 cities, and it officially launched in July 2019 nationwide. They have about 28 products in about 5 different categories. They are seeing an uptrend in the amount of cups sold per customers. So here we're gonna talk a little more about Luckin Tea stores. The first store opened in October 2019. Before the store opened, when they tested it out in little kiosk, or they had like the vending machine stuff. But in October 2019, they opened the first store. And here they talk a little bit about the differential between Luckin Tea and Luckin Coffee. Luckin Tea is mainly a tea focused store. They have fewer coffee products, but they still have coffee products. They're trying to focus nationwide, including lower tier cities. Right, so this is what we saw. We saw that tea is about 95% of the caffeine Chinese citizens drink. So it would make sense that this whole focus is included into the whole nation, even the lower tier cities, and it's mainly via partnership model. And what they call their partnership model here is their franchising model, which we're going to take a look at in a bit as well. Next, we're going to have Luckin Coffee. Luckin Coffee is their big breadwinner here. It's mainly coffee focused products, but they also have some tea items. Here they focus more on vibrant regions and very economical places. The stores here, they're mainly self-operated. They don't really use partnerships to open up more stores like this. And the great thing about using Luckin Coffee and Luckin Tea is Luckin Coffee was already developed, so Luckin Tea, even though it's a completely different store, they're able to use the support by the same technology and supply chain network, and they have applications that are able to link with both stores for the customers. So, like I said, it's very cool it was pretty cool that they were able to make 2 different stores but use the same amount of products to reduce the cost of starting a whole new chain. So here they talk about their retail partnership. So their retail partnership is pretty much just their franchising model, right? So like if you want to franchise a Chick-fil-A or a McDonald's or something, they have certain standards for the sponsors, and they have certain for the person wanting to start up the business. So in Luckin Coffee, the responsibilities are pretty much all customers, right? Because they're such a big brand, they provide the customers technology, the supply chain, the products, and the benefits that they get by doing this is they have lower costs to this, right? Because they are increasing the amount of products they build by if there's more stores, the cost of raw material decreases as you buy more stuff. Faster expansion, right? If more people want to open up a partnership, obviously it means that there's more people. It takes less money for Luckin Coffee to open up new stores, so more stores are being opened up. More customers coming in, more customers means more brand development, and revenue increases as well. Then when we talk about the person in partnership, their responsibilities is they have to pay the site rental, they have to pay renovations, they have to pay the staff and the daily operations. So yeah, right, they take a huge portion of the cost for Luckin Coffee, but they also get benefits, right? They have lower risk because they already have a brand that they're working with. They already have the technology at hand to create, to have the application, and they're able to have that customer footprint coming in already. Here they talk about how revenue sharing works. So it does seem like store revenue, when store revenue increases, at the first few stages, the retail partner, they did not give an initial point, but they do show that the retail partner, whoever opens up the store, starts collecting the money first. After they hit a certain point of revenue, that's when Luckin Coffee starts collecting revenue from it. So again, it's a very strong incentive for entrepreneurs in China to build a Luckin store, a Luckin Coffee store, a Luckin Tea, because they're gonna get rewarded by a lot of the revenue at the beginning, and only until later on will they pay some form of royalty to Luckin Coffee. So next, we're gonna take a look at some numbers. Here we can see the number of stores in the second quarter of 2019. This company had about 2,963 stores. In the past quarter, so a quarter after, this company opened up over 700 stores. So that's crazy, right? From not even 3,000 stores to over 3,680 stores. So you can see why this company is pretty impressive in this growing rate. So now let's try to see how many, one of the things I want to see is how big is Starbucks in China. So I decided to do some research on that. And here I have Starbucks in China has 4,100 stores. This company has 3,600 stores, growing at a faster pace. So we're going to see this company is definitely trying to be the biggest chain of coffee in China, and they're getting there at a fast pace. And there were some few articles that I found that I thought were pretty. So here we're going to see store level profits. So like I mentioned, right, this quarter was the first quarter this company actually provided some positive profit results. I'm not saying the company is telling the full truth or if it's telling the full lies. The other numbers make sense to me, but to see this company continue to lose money and have such a huge gain of profit margins in the third quarter and in the fourth quarter, that if anything would seems fishy, it would be there, right? From 44% loss in profit margins to 6.4% in one quarter is definitely something to take note of. So that's, one can see why this company, right, there's a reason one can actually see, hey, this company might actually be inflating its numbers. So next we're going to see net revenue breakdown and growth. Most of the products, we can see most of the revenue collected from this company comes from freshly brewed drinks. The other come from other products. And here we can see they also give us product revenue growth. So quarter 3 year-to-year growth was about 558%. Quarter 2 2019 year-to-year growth was 698%. Quarter 1 year-to-year revenue was about 4,000%. But we can see the number of stores have increased dramatically. We saw it in the other slides per quarter. So this is understandable. Quarter-to-quarter growth is actually also pretty strong. This quarter 3 compared to quarter 2 of this year, saw about 72% growth, and from second quarter to the first quarter saw about a 95% growth. And most of these you see high double-digit growth, some even triple-digit growth, except this first quarter of 2019 where it only saw 2% growth. But I took a look at the upcoming guidance for this upcoming quarter of quarter 4, and they say they're expecting about a 40% quarter-to-quarter growth, and it's still going to be a very high, at least high double digits. Next, we're going to talk about their cost structure and their improvements. So here we can see that as they sell more products, obviously as they sell more products, the increase of products doesn't increase as much, and to own the store doesn't increase as much if they sell more products. And you start seeing the cost of materials going down, everything. As the revenue increases, the percentage of the cost usually doesn't increase. The actual number of the cost for everything doesn't increase as much, right? It doesn't matter how much revenue you sell, your store rent is always going to be the same, even if you sell one item or you sell 100 items. So no matter how much revenue growth, your store rent will always be the same, but the percentage of revenue per store rent is going to decrease, and that's what we're seeing. All the costs for this company continues to go down, and that's the reason why we see those margin increase in profit margins and operating margins increase. The next thing we're going to talk about is when this company first started, the main way they got into the game was they were strongly into delivering coffee. So they were delivering a lot of coffees, and we can see in the first quarter of 2018, 61% of the revenue made up were delivery orders, and in second quarter of 2018, the same thing. But look, now in third quarter of 2019, this company's delivery orders only make up 12% of the company. And to me, that's pretty important. That means that the other 80%, 88% are people coming into the stores where just about 2 years ago, only 40% would come to the store to make the purchases. So we're seeing that huge increase of foot traffic in the stores, which I think it's pretty impressive to see that growth happening. Next, we're going to take a look at cash used in operating activities. So here we can see that every quarter this company is using less cash for its operating activities. It is at a loss, but it is decreasing. So eventually they might start seeing some profits here. They do say that their total liquidity is pretty high. They have 5.5 billion yuans of liquidity, and that's probably all the inventories, all the stores they own, and cash at hands. All right, so that's it for their slideshow. Now let's take a look at the letter they have for us. And I don't think most of the stuff here is a repeat of what I just talked about, but I did highlight a few points that were good to talk. The first thing is that their goal is to become the largest coffee player in China by the end of the year, by the end of 2019. And they were so close, right? They were so close to Starbucks in number of stores that I do think it might have been actual. It might be actual that they did become the largest coffee player, if not by the end of this quarter that just is about to end, by the next quarter, because the amount of stores growing was ridiculous. They do say that China's coffee market remains highly underpenetrated, so they are excited that they have so much growth potential ahead of them. And they are excited that they are one of the first players outside of Starbucks to enter this market. And for the final slide, I'm going to talk about is their guidance that they gave for quarter four. They expected revenue for about 2.1 billion yuan, and that would be a 40% growth, which I mentioned earlier in this video. All right, next let's take a quick look at this company's income statement. One thing to take a notice is these numbers are going to sound pretty high, because I'm going to be reporting them in yuan instead of dollars. So they are about 10 times higher than you compare to US dollars. The first thing we're going to see is fresh brewed drinks. This company in fresh brewed drinks is making that about 567% growth that we saw in there. This is the biggest part of this company's total revenue, coming out at 1.1 billion yuans compared to 1.5 billion compared to the 1.5 of total. So over 70% comes from freshly brewed drinks. Here we're going to see that compared to the same time last year, cost of materials has increased, and that's to be expected, right? If they're selling more coffee, then they have more cost of materials, and the cost of materials has increased about, I want to say, 5 times more. So it makes sense, right? They're selling about 5 times more coffee, so they should have 5 times more cost of material. They also have an increase in cost in store rental and operating margins by about a little bit over 3 times as much. But again, it's expected because this company has opened up more stores. Sales and marketing expenses have increased by a little bit over 2 times, and again, that's expected, right? Because if they have opened up new places, they are marketing in different parts. They are increasing their markets. They're increasing their customer service. General and administrative expense, again, has increased a little bit over 2 times. And again, same reason. If you're opening up new stores, you have to open up with new staff and new workers. Total operating expense at the end increased by about 3 times, which again, these numbers don't seem, the percentage increase don't seem too off with the total net revenue increase, right? It makes sense. The numbers don't look that bad. Next, we're going to take a look at this company's balance sheet. And the first thing we're going to see is this company's total current assets has increased about almost a little bit over 2 times, a little bit less than 3 times, compared to the end of their fiscal year of 2018, which was December of 2018. The biggest increase was in cash and cash equivalents. This company increased its cash by about 4 times as much and increased its short-term investments by about 10 times as much, sitting at 1 billion yuan compared to 130 million yuan same time at the end of last year. And then we can see their inventories is also increasing. When we take a look at non-current assets, the biggest grower is definitely the property and equipment. They have increased their property and equipment by about 300 million yuans, and they've also increased their other non-current assets by about 300 million yuans. And that's, again, it has to do with the whole increase in value in stores, right? They're having more properties, they have more equipment and more non-current assets than they had same time at the end of fiscal year last year. Short-term borrowing has increased. They do have more short-term borrowing and they have more current portions of long-term borrowing. One thing that I do find weird is this company does not have any long-term borrowing anymore. It says blank, but I wonder what's the deal here. You would expect this company to have some form of long-term borrowing, especially if same time last year this company had about 226 million yuans of long-term borrowing. And at the end of the day, total liabilities did increase, but the biggest portion, actually here we can see, right, this total long-term borrowing of 226 at the same time last year is actually being paid off. It's actually being paid off in this upcoming quarter. It's actually right here. So it doesn't seem like they taken out any other loans besides that one. That's all the money they needed, and that's how much money they gotta pay off by the end of this year. So total liabilities have increased by about 400 million yuan, but it's not that big of an increase compared to that company's total current assets and total current liabilities. And it makes sense, right? If this company has this much more cash and cash equivalents, then this company can definitely pay off its long-term borrowing, and it doesn't need to borrow any money right now. But again, that company is saying that all these numbers are inflated and that these numbers are all a fraud, and that this company should continue to drop down. So let me know what you guys think. Let me know how you guys saw. What I did see is, obviously, I can't tell if these numbers are fraud or not. In my mind, the numerical values of things increasing the way they are does not seem to not make sense, right? You're opening up you have way more stores, so you obviously expect increase in number you see that high growth of revenue, which I think is not unheard of. You have a bigger brand, so obviously you're going to get more customers. With more customers, again, bigger revenue. You have more revenue sold, so the amount of revenue sold will offset your costs. Costs usually have more of a flat line type opposed to revenue always increasing. So obviously your profit margins are going to go up. So yeah, it's definitely, this one is pretty tricky. I think the company is pretty cool, right? It is becoming the biggest coffee chain in China, and we'll have to look at the numbers of this upcoming quarter to see if it actually became the biggest coffee store in China. So take care, guys. Hope you guys enjoyed this episode. Have a good night and see you next time.